Hi everyone. Okay, so let's go over exercise 1-7. It can be found on page 70, I think 70, 71 in your textbook. What I'm going to do is, as you can see in the question, it has a chart that it wants you to fill in. It wants you to fill in whether it's a balance sheet item, income statement, or statement of changes in equity. And if it falls under that category, of statement, what part of that statement does it go in? Does it go in under assets, liabilities, owner's equity, revenue, expenses, and so on? So what we're going to do first is I'm going to go through each of the account names, and then from there I will show you how they fill in the chart. And then you can either look at the chart, pause the video and look at the chart, or you can go into the solution that I also provided on the Brightspace page and look at the chart there. It's entirely up to you. Okay, so accounts payable. All payables are liabilities. Okay, we're liable to pay that back. So we owe somebody some money. So accounts payable means that somebody has provided us with something or a service and we haven't paid them yet. Okay, so accounts receivable, we're due to receive money in the future. Okay, so a customer hasn't paid us yet. So it is an asset. We're due to receive some money in the future. Advertising expense is an expense and of course goes under expenses on our income statement. Insurance expense, it's the same thing. Insurance expense is an expense, so it goes on our income statement. Owner's capital ending balance. The owner's capital ending balance will be seen on our statement of changes in equity, and then that amount will be carried over under the owner's equity section of our balance sheet. Because remember, our statements link together. We have our income statement, which is revenue minus expenses, gives us the profit. The profit goes on our statement of changes in equity. That gets added together with a few other items, withdraws, investments, or if it's not a profit and it's a loss, that goes into our statement of changes in equity. And then that will give us our ending balance, and then our ending balance goes on our balance sheet. Interest payable, another payable, so a payable is a liability. Prepaid expenses. This means that we're paying expenses before we have to. So maybe it's insurance, okay? And we got a bill for a full year and we pay it up front. Well, we haven't used it yet because we've got the use of it for the whole year. So a prepaid, even if it says expense, a prepaid expense is an asset. There's value left in it. Okay, interest expense is an expense, so it goes on our income statement. Withdraws, those are owner's withdraws, goes on our statement of changes in equity. And if you remember, withdraws is how the owner of the company gets paid because they can't take money out of the company under either salary or wage expense. So they take it out as a withdrawal. Owner's capital beginning balance, that's how your statement of changes in equity starts. And that beginning balance is coming from the ending balance on your balance sheet last year. Okay, so the beginning balance comes from the ending balance of last year. Prepaid rent, again, prepaid, so therefore it's an asset, it's paid in advance. Vehicle expenses is an expense on our income statement. Furniture is an asset. Salaries expense is an expense. Service revenue is a revenue account, so therefore it's on our income statement. Other expenses, any expenses, except if they're prepaid, any actual expenses goes on our income statement under expenses. Interest income is a type of revenue, which goes on our income statement. Cash is an asset on our balance sheet. Telephone expense is an expense on our income statement. Investment by owner, again, investments go on our statement of changes in equity. Supplies is an asset, but if that said supply expense, which is in the next column, then it would go under expense. But where it just says supplies, it's considered an asset. We haven't used it yet. Wages expense is an income statement expense. Fuel expense, income statement expense. Notes payable, again, a payable is always a liability. Merchandise inventory, so if we have inventory, that's an asset. Utility expenses, like the power bill, that's an expense on our income statement. Vehicles are an asset. Salaries payable are payables, so therefore it's a liability on our balance sheet. A building is an asset on our balance sheet. Profit loss, that is on our income statement. It goes under revenue minus expenses, gives us profit or loss, but that profit or loss actually gets carried over to our statement of changes in equity, because remember, our statements are all linked together. That's how they're linked. Equipment is an asset. Maintenance expense is an income statement expense. Land is an asset. Unearned revenue. So this would be like, say somebody booked a wedding with you and they had to put a deposit down. You paying me a deposit is an unearned revenue. Okay, I haven't done anything to earn that money yet, and I may have to pay it back to you. So therefore, it's a liability on our balance sheet. Rent revenue is a revenue on our income statement. Supplies expense is an expense on our income statement. Interest receivable, we're due to receive something in the future, so therefore there's value in it, so it makes it an asset, just like accounts receivable. And then rent expense is an expense on our income statement. Okay. So here's the filled in chart. Have a look and let me know if you have any questions. So for example, the profit and loss, we talked about that on the income statement, revenue minus expenses gives us our profit and loss, but the actual profit and loss number is on our statement of changes in equity as opposed to either a revenue or expense. Okay, capital beginning balance, capital ending balance. Owner's capital ending balance is also on our balance sheet as we talked about. So again, let me know if you have any questions.